Well, hello traders, and welcome to our afternoon webinar here at TradeStation. TradeStation, the multi-asset online brokerage and trading technology company based in Plantation, Florida. I'm Don Prattle, the Director of Trader Development and Education here at TradeStation. It gives me great pleasure to welcome to TradeStation today Mr. Larry Williams, an American author, stock and commodity trader, and public activist or political activist from the state of Montana, currently relocated to the Virgin Islands, as some of you have seen in the chat panel. Larry is the author of 11 books, most on stocks and commodities trading, and he's also written other books. But the key things for Larry today is that he is one of the world's most notable trading educators. And our philosophy is to offer you the best, most objective and actionable information in a really timely manner to help increase your odds of making a successful trading decision. So none other than Larry Williams can help us by telling us the things he's trading right now. Now, as we jump into our presentation today, bear in mind that Larry's taught thousands of people how to trade in the markets and has been the only futures trader in the world to repeatedly trade $1 million of his own money live at seminars around the globe. In between trading, researching, and developing trading tools, Larry has managed to run twice for the U.S. Senate as well as 76 marathons. So we'll be happy to hear about his best trades right now today. Remember that our presentation is for educational purposes only, and all the symbols and any of the trading ideas that we discuss are for demonstration purposes. They are not recommendations. This presentation is not an offer or a solicitation of any kind any place where our TradeStation affiliates are not authorized to do business. Remember that active trading is not suitable for everyone, and options trading carries a high degree of risk and may not be suitable for all traders. We've included in the chat panel a couple of pieces of disclosure information and different PDF handouts that you may want to download, open up, and try and read at your own leisure. These documents are also available on the TradeStation website. Now, the question always comes up at this point, what can I do to review this presentation? We are recording, and so our recording will be available sometime tomorrow. That's sometime Tuesday the 19th on the TradeStation YouTube channel. There is a link to the video archive in the chat panel. Scroll up towards the top. You should be able to see it. If you're a TradeStation user, our webinar will be available for you on VideoStation tomorrow. So we want to welcome Larry Williams again at this point and talk about his best trades right now in December 2017. Thank you very much, sir, for coming to TradeStation today to help us advance our trading philosophies. And we know you're a TradeStation user, and so I want to have you talk about any of the trades that you have. And your questions in the chat panel, we'll do our best to try to answer those. Larry has already been engaging with some of you in the trading in that chat panel, but we'll continue to do that throughout the presentation. So, Larry, thank you very much, and take it away.
Well, Don, thank you very much. I really appreciate being here. It's always fun to be with everybody from around the world. My gosh, we have people from Italy and Montana, it looks like, and all over. So we're kind of a family of traders, and that's a very special experience for me. And maybe for you guys, because, it's kind of a lonely life. We don't, your next door neighbor doesn't trade most likely, and you go to a party and they look at you kind of weird when you tell them you trade pork bellies. So it's kind of nice to be with the family of people here that are trading. I will try to answer the questions that come along. Oh, from Singapore, hi, Boyd. I can't answer all of them, but I will do my best because at some point they start flying through. I can't get to all of them. First one is, where can you learn more about trading options on futures? I don't know. I don't trade options much myself. I trade futures, and I'll tell you why. This is an interesting point before we get into my trades. If you look at the World Cup Trading Championship, the people that have the greatest potential of winning those championships are option traders and forex traders because they have the best margin. abilities. But year after year after year after year, the highest gains are posted by the commodity traders. And I think there's just a heck of a message there. There's consistently more success and greater returns trading futures than the vehicles that you think would be able to produce the most profits. Okay, well, with that, let's get right to trades. I trade things a little differently than most people. That you're probably, if you don't know my stuff, I think that markets move for reasons. Price goes from point A to point B because of fundamental considerations. What a novel idea, right? Instead of just a bunch of squiggly things on your charts. So I look at conditions that in the past have been present when markets have had big up or down moves. And we have a condition right now that I'd like to show you. This is the Canadian dollar. The green line that you see is the small speculators in the marketplace. As you can see, the small speculators are very bullish up here as they were back here, as they were over here. In other words, this is a measure of sentiment. The opposite of that would be the hedgers in the marketplace, the producers and users of the commodity. I noticed they were very bearish here. They were bearish historically here, over here, and back here. So to me, this is a condition to, oh, we could have a decline in the Canadian dollar. I'm looking at a weekly chart here, and of course, I'm looking at the Commitment to Trader report, which is available in TradeStation. So that's a setup tool. You cannot see my cursor. Thanks for that. How about now? Can you see my cursor now? Oh, yeah, I can even draw. Whoa, look at that. I wonder if that's the right cursor. How about this? I think I'm going to use that ball instead. Okay, guys? Now we can see the dot. Okay, we're going to use that. So, okay, well, look, I've got commercials have been selling this market. Back here, they're heavy buyers. Market rallied. They're heavy buyers here. Market rallied. So that's just a setup for me. And then I want to look at other things. So what I see is there's a large long position by the small specs and the large traders. The large traders is the blue line you see. I've circled that here. And the large traders, which are primarily funds, by the way, they're heavily long this market, and typically when they get heavily long this market, as you can see in the past, it declines. So I wouldn't take a trade just because of the Commitment to Trader report. However, it's a great setup tool in the marketplace. Another setup tool that I like, but one you got to be very careful with, is the seasonal pattern in the market. Sometimes we follow the seasonal pattern, sometimes we don't. In the Canadian dollar, you can see that we've had a pretty good tendency to follow the seasonal pattern to the downside as we come into the new year. This is started 2017, started 2016, started 2015. Well, here's where we are right now. The seasonal pattern, and this is my unique seasonal pattern in TradeStation. It's not like anybody else's seasonal pattern because it's adaptive to what's going on. It doesn't just regurgitate so the past looks like today, and if you're doing research, it makes a huge difference. So I see a couple of things here. I go, wow, that's interesting. Commercials have been selling the market, and the tendency at this time of the year is for the Canadian dollar to go down. So another thing I might want to look at is this market under accumulation. The green line you see is an interesting measure I wrote about years ago, and I think Futures Magazine. It's a combination of price, open interest, volume. So I'm measuring, I think, as best as I can, accumulation in the marketplace. As you can see recently, when the Canadian dollar rallied up here, look at the green line. There was no buying at all. That was just like there was no serious buying in that market at all. You can see the huge difference here was a little bit of uptick in volume and open interest, and that's all there was to it. And of course, the market came down. So it doesn't look as though there's a lot of. Can you hear me? I got a couple of people saying no sound. Okay, that's on an individual basis. Okay, good. Thanks, guys. So that's another measure. Well, okay, this market looks like it's been under some distribution. It's breaking lows in the marketplace. So I've got a combination of things going on here. And that's really what I look for, is I want to get a combination of ingredients to force me almost to be in a trade. I do think that markets are cyclical. And so I do some cycle studies. The current cycle in the Canadian dollars that's been the most active is about 66 days. And you can see there's a cycle low here, a cycle low coming in January, which means we should be declining, just as we declined here, as we declined over here. Didn't decline here. Cycles aren't perfect either. There is nothing in this business that's perfect. I know from my own trading that, I don't have winning trades all the time. I guarantee you will lose money if you're going to trade. Hopefully you get more wins than losses, but this is not an easy business, which is why I like to get a bunch of things. I had an email, very interesting last night, from a fellow in Cody, Wyoming, and he commented about how frustrating, how difficult it's been. He's been a day trader, so I need to point out I'm not a day trader. Maybe because I'm 75 years old and it's a lot of work. Got boom, boom, in, out and stuff. I want low-hanging fruit. I want to get a small position, capture a big move. Day traders, the only way you can make a lot of money day trading is have a large position on. And my experience, and maybe it's just unique to me, is that my stops in day trading are about equal to my gains. And so I have to be highly accurate. And it's very frustrating that you don't make a lot of money. I don't think most very few day traders make money. It's a great pitch for people to be a day trader, but I don't really see people consistently making money doing it. So I want to go for an easy way. Here's a tool I just love. This is going to be a tool that you're probably not used to. And it's a forecast based on intermarket relationships. Notice that this red line is actually the relationship of the Canadian dollar to another market. And this other market has the ability to give us a forecast almost 2 months, 2.5 months out of when we should see rallies and declines in this market. So I really like this as a intermarket relationship. Now, if this is new to you, I did do a webinar at TradeStation. I'm certain it's on their YouTube channel. You could go there to get in depth of how these intermarket relationships work. So what I see is the commercials have been on the short side of the market, or not buying. The small traders have been buying. They tend to be wrong. I see that the seasonal suggests we should go down. The cycle suggests we should go down. And my intermarket forecast also suggests that we should go down here. So to me, this is a market that's set up to be a buyer. To be a seller. When we want to be a buyer, I don't know yet. I know that my intermarket forecast is still on the downside. Cycles are down, and of course the commercials have not moved heavily to the long side, and those small speculators still have a lot of long positions on. I'd like to see them get liquidated before I can even think about being seriously long this market. So we have a market that looks like it's set up here for us. I can also look at value. I look at value. You can compare, as we're doing here, comparing the price of the Canadian dollar against gold, and it's actually in an undervalued zone in here, so that's not bullish. So there's a little concern there that they're never going to find a perfect trade. Those red or blue lines you're using, I don't know. Soon we're talking about probably this chart. This is the intermarket forecast chart. That's just another market that we can use to get a projection of what should happen. Okay, so there's never anything perfect. Now we have to take all that and go, well, now we got to go to the daily chart and look for a sell signal. One thing I like is my Williams %R. Why do I like it? Because I developed it way back in 1966. It's a pretty good overbought, oversold indicator. As you can see, when it's in the high zone and the overbought zone, we tend to come down in this market, right? And this was posted on Friday, by the way. I've got some more current charts, but this is, I think, on a Thursday or Friday chart. So we see we're close to the overbought zone, which means there's been a lot of buying in the market. And the trend of the market, the blue line is my measure of momentum, or you could use a moving average, also suggests the market's in a downtrend. So we have a setup market for sell signals, downtrend market, and a short-term overbought condition. To me, that says I better start looking for a potential entry into this trade. So, where can I enter? I could enter at the prior bar's low, use my oops formation, or whatever techniques you guys and gals have, you could use for an entry technique in this market. And I will get to today's action a little later in the presentation. So that's how I go up finding a trade. Here's another trade. This is a trade those of you who've been with me for a while know we've got pretty excited about the dollar index. Oh, look why. The red line is the commercials. The commercials are net long. This is the most net long they've been for years. seasonal patterns to go up this time of the year. The blue guys, that's the large traders, of course, have been getting way out of this market. The large traders tend to be trend driven. Notice that when the blue line comes up, the markets start to rally. When it comes down, they sell weakness and buy strength. So a pickup, the blue line is often a very good buy signal as an entry point. So I see another example, oh, seasonal, commercials. Maybe I got something going here for a trade. Then I look at my intermarket relationships for the dollar index. And I find that, in fact, there are good intermarket relationships that suggest this market will move higher. But I may get a little bit of a bounce in here and then pull back. We certainly did a good job of calling the low here. It's a general idea. It doesn't call the market right to the day, but it generally gives me a pretty good idea of how this market will move. Here's an example of why. Let's say that you want to look at the lumber market. Well, lumber market is highly influenced by interest rates. So what happens in interest rates has an effect on lumber, and that's these intermarket relationships. What happens in gold can have an influence on the dollar index. So these intermarket relationships are really important. There is no intermarket relationship available in TradeStation. You should find %R in the TradeStation indicators. And I have a whole indicator package. If you don't have my trading techniques and tools and all that stuff, we make them available to you for not too much money. So this has been a really cool technique to give us an idea of the future. And again, I like to find value in the market. And in the dollar index, you can see when it's overvalued, it's up here. This is interesting. Even though the market's been coming down, it's still overvalued. Recently, it's been in the undervalued mode. So I like that. I have value behind me in this trade. I think that there's a relationship. Most all these commodities relate to gold as a storehouse of value. So we can look at that relationship of those markets. And it's not a timing tool at all. It just says the market's in a value zone that could last for a long time or in an overvalued zone. And that is a very general tool. Then I want to see if there's any accumulation in the marketplace. And I noticed there's a little bit of going on in the dollar index. We went lower here than back here, but accumulation held up in here pretty well. Where do I find intermarket relationship? It's not in TradeStation Cliff, but I did a webinar. So on the TradeStation YouTube channel, you should find my intermarket relationship. Did that, oh, maybe at the first of the year, I don't recall, but you can go, you'll find it there and you can review that. So the market's pulling back. Oh, I kind of like that, right? Because I like to buy when the market's oversold. So, and we'll get to this in a little bit, but you see the setup. So now we've got a setup. I want to pay attention to it. Now, for a lot of you, this is a lot of work. You got to look at all the indicators, keep all this stuff, and follow it. So I thought I'd give you an easier trade. Here's a really interesting trade. This is the seasonal pattern for the seminar we did is called Better Entries with Intermarket Relationships. Thanks, Gregory. So here's the S&P 500. This is our mechanical trading system on it that is available at TradeStation. Notice the seasonal pattern starting right now is for the Dow Jones Industrial or the E-minis to rally. So we have a really strong seasonal pattern right here, right now. So let me show you how we can trade that. If you can find a trade like I've shown you, or if you're a system trader, just let the system take the trades and find the trades for you. Some people prefer to do it that way. Some like to do it the way I do. It really depends on a couple of things. How much time you have, what your inclination is. Do you want to just have something mechanically do this, or do you like to do what I do and try to figure all this stuff out? But the nice thing about an auto trade system, it finds the trades for you. So here's the cycle that we see in the S&P E-minis. And starting about December 15th, historically, we've rallied a lot of the time until the first of the year. Well, can we find a trading pattern in there? Can I get a trade for you guys and gals? Probably so, because we know about this strong bias here. So this is the way I go about that. I want to buy X number of days prior to the Christmas holiday. If I buy 2 days prior to the Christmas holiday, in the last 20 years, there have been 19 winning trades. I'm using a stop here of $1,900. I'm not. We have an auto trade for gold, but it's sold out. What package has the seasonal strategies indicator for equities index? The seasonal strategies work for stocks, futures, doesn't matter anything. So I know based on the work that my friend Art Merrill wrote in the 1960s, there's usually been a tendency for prices to rally around Christmas. Marty Zweig also wrote about this. Well, we see we can make a trading strategy out of it here, buying 2 days prior to Christmas. I will use a $1,900 stop. I will exit after being in the trade for 1 day and getting a profitable opening. Now, there's a lot of other ways you can get in and out. This is mechanical. We have to do that in the computer. So the computer can't use your trading skills or the art of being a trader. It's just a stupid, dumb computer. But we can develop strategies so we see that, oh, there's a real strong bias. In fact, actually starting about 5 days before the holiday, but 2 days before and the 1 day before the holiday itself, that would be coming up this week, right? We have 2 really strong trades in here on the long side and the S&P E-minis. And you can take these next year as well, because there'll be a Christmas next year. And you need to remember there's some really strong, just like gimme trades right around Christmas, right around the 4th of July, around Labor Day, that we can use for short-term trades in the market. Now, how long do you want to hold this trade that I just showed you? Well, the maximum trading, if you hold it 1 day, first out, get on the first profitable opening, you're out in a hurry, you make $6,000. If you hold 3 days, you make $12,000. But actually, you make the same amount of money holding 2 days, right? And I don't like to hold trades long, because the longer I hold at least a short-term trade, the more exposure I have. So I think the best, you want to hold it a day or 2 days and get out of the trade. You have 95% accuracy back here. So that's a really nice short-term trade. That's my Christmas gift to you. Most people are aware that we tend to rally at Christmas, but they don't have a strategy for it. Now, you've got the strategy. Well, there's another interesting trade at Christmas. There's a lot of interesting trades at Christmas. One you can look at on your own is the retail stocks tend to decline after Christmas. Makes sense. I mean, just pure logic, right? Because they've stopped their sales. Now they got to sell stuff at discount prices to blow it out of the store. So you can do your own research on that. But look at the major retailers, Best Buy, jewelry stores, people of that nature, and look at what happens on average to those stocks after Christmas. Well, cattle rallies just before Christmas and into the new year. And this has been a really strong pattern in the cattle market. So there's another nice little trade coming up here. You see, this is Christmas. We're a couple days before Christmas now. We have always seen strength in this market. In fact, we can do my test. We're testing, and we buy cattle 6 days prior to Christmas. In the last 12 years, that's been correct 100% of the time. We buy it 2 days before Christmas. It's been correct 100% of the time. So there's a nice little bias. And I trade these biases. I go, okay, just wait for a trade like this. I would prefer to have things come in alignment to me as me trying to force a trade in the marketplace. When I talk with people, what I usually see is they're forcing trades. And it's so easy to force a trade. I would rather wait for the trade to come to me. How long should I hold this trade? Well, if you hold it 8 days, you make the most money, but then you start to suffer some accuracy. One of those trading was a losing trade. So usually around 4 days, hold it for 4 days, you make almost $13,000. You can see and notice what I'm showing is how I think here. Like, oh, I found a seasonal bias. Good. How many days before the holiday do I buy it? Good. Got it. What size stop do I use? Oh, got it. How long can I hold on to this trade? See how my mind works? I hope that you can do that with your thought process. If you get nothing else out of this webinar, I hope you understand there's a thought process we need to go through of set up a market. When do I enter the market? What should my stop be? How long should I last in this trade? The best stop? Actually test out at $2,000. You make the most money. However, at $1,100, you make just the same amount of money as 2,000. TradeStation automatically puts this gray line on, but notice that, oh, the best stop has been $1,100 for this Christmas trade. In the last 12 years, that's been successful all the time. 1,900, 800, just a little too close for the market. By the way, if you're getting stopped out a lot, it's because your stop is too close. Because we all fear losing money, we tend to have really close stops as we start to trade and don't know what we're doing, because we think, well, we're being less risky, right? Actually, you're being more risky because you get stopped out of your trades all the time. So I like to give the market some room to breathe. And in this case, in cattle, about $1,100 has been an ideal stop to use in this market. Well, here's cattle. This was through Friday. There's that seasonal pattern. Ooh, I'd like to see this market come down in the overbought area and then look for an entry. Actually, this is today. This is through today, earlier in the day. So what I want to do in this market now is I'm in the area of weakness. I can be a buyer back at the close to the low on Friday, or if we get above Friday's high, well, that's a breakout buy to the upside, and there's my entry point. So I'm just looking at the last couple of days, slam down day to day. If we dip further, buy into the weakness. If we don't do that, be a buyer on a breakout at Friday's high in the marketplace. So there's what I'll be doing in the cattle market tomorrow. If you like these ideas of trading day of the month, I do a Larry TV market commentary every week, and I show trades just like what you saw, the cattle trade, the Christmas trade, and we show the trading day of the month. There's some great trading days almost every month for gold, S&Ps, and bonds when these markets have rallied consistently. Usually they're at the 11th trading day of the month, bonds rally, some months more so than other months. So every week I go over those and we can show people what those trades are. That's about the only thing I do anymore is my Larry TV commentary. If you want to see how I'm trading and follow my trades, you can go to our website at reallytrade.com. So we talked a little bit about retail stocks at Christmas. Here's Target. Oh my gosh, look at that. Look at it. There's Christmas. Target actually starts to come down before Christmas and really falls apart after Christmas. So you option guys and gals, I saw some people writing about options here. There's an option strategy for you. All the commodities rallying near Christmas because the truckers are home for the holidays. Yeah, could be. Everybody's out buying stuff, and I think people, oh, everybody's buying Christmas stuff. So those stocks rally, but then right after Christmas, go look at the retail stock and talk about a sweet setup trade. Okay, let's focus on gold a little bit. I know that's a market people like to talk a lot about. Gosh, we have a seasonal low coming up in gold. Look at that seasonal pattern in gold. That's the blue line. We have a bias in the marketplace. The commercials this last week started to buy back in the marketplace, but they're not heavily long like they were back here or here. But they've started to come into this market on the long side, but not in a big position yet. Notice the blue line. The large funds are still long, as are the small speculators. Oh, I guess I've got to slide out of order here. If you sell Target 8 days after the Christmas holiday in the last, that's right, 39 years, that trade has been successful 92% of the time. Shows you the bias you can find in these markets if you just spend a lot of time looking at the markets and thinking about these things. So you option guys and gals, obviously a potential option trade there. Well, here's an ETF for the retail stocks, XRT, and look what happens right after Christmas. And XRT, which is really an average of all retail stocks, there it is. So what you've learned today is a really strong bias, and now it's up for us as traders to take advantage of these things as trading. Okay, back to gold. Well, gold's coming into a cyclical low down here, right around Christmas. A little is where the cyclical low is usually come in this market. Intriguing to me. If I look at accumulation, though, the accumulation has not been nothing good going on in accumulation. Intermarket relationships, though, notice this nice, strong intermarket relationship rally here, should peak out in here, and this is known about 65, 70 days in advance. Intermarket relationships suggest we can still go lower. I pay a lot of attention to that, so I'm not in a hurry to get into gold. I also have already started my 2018 forecast report. It suggested that we will start to dip down into February in the gold market. Please define accumulation for the newbie. Sure. Kathy, professional people buy stocks and commodities different than the public. They accumulate that market. Basically what they do is they buy weakness and the public buys strength on balance. So what I'm looking for, let's go back a chart. I'm looking to see when there's divergence between price action and market action. Notice that this close right here is equal or lower than back here. But my accumulation line wasn't saying on this decline, the professionals didn't get out of the market. They actually held this. That's bullish, and the market should rally, as it did. So I'm looking for the divergence between price action and accumulation. Accumulation is stronger here than price action. That's bullish. We saw a while ago in the Canadian dollar where the market rallied, but there was no green line pickup, no accumulation behind it, and the market came down. If that doesn't help, Kathy, let me know, okay? So we had a nice suggestion from the forecast made over a year ago that the market should start to come down this time of the year, bounce a little bit, but my forecast for 2018 says we're probably going to continue lower. That looks like a February low coming in this market. But this is a lesson that a lot of people don't know, and it's trade selection. I'm going to take this a little bit further here, okay? What we're looking at is the energy markets. This is crude oil, this is heating oil, and this is unleaded RB. I went short unleaded natural gas in here, unleaded gas, and here's why. Notice that while heating oil rallied to a new high here, crude oil got back to it, unleaded didn't. It was a lot weaker. Do I still use your ultimate oscillator? I haven't used it for a while. I look at it occasionally, but I only have like 3 things on my charts anymore. I don't have a lot of stuff on my charts. I have basically what you're seeing here. So I want to sell the weakest market and buy the strongest market. You'll see a trade in a moment that I had in that market, and that's why. So if I look at gold, this is gold today. Gold had a nice strong day today. Now, we're in a downtrend in the market. Seasonal patterns down. We're rallying against the trend. Green line accumulation, not much. Wow, do I want to sell gold? Maybe, maybe not. Because gold and silver move together, and look at silver. Silver has not rallied nearly as much in here as gold did. Look at gold, boom, 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 really strong, right? Silver isn't. Silver is barely above the high we saw 4 days ago, so still in a downtrend, seasonal pattern to go down. So the market I want to sell here is silver, not gold. See my thinking on that? I want to sell the weak one. If I could be wrong in my trade here, but if we are going to move to the downside, silver will move down quicker and faster and more than gold because gold has been so much stronger. Soybean oil today intrigued me. This market's not under accumulation. There's been some setup stuff in here. I think I like these days, like the day where we slam down, close down. If we can get above Monday's high on Tuesday, I think that's an entry in this market because the market has been set up on the long side. And notice, you look at your charts when we're through with this, you'll see soybean oil has been a whole heck of a lot stronger than soybeans or soybean meal. Again, using my idea of comparative strength. Here's cocoa today. Cocoa, notice the seasonal pattern is the downtrend. Momentum is for the downtrend. We're in the overbought condition in the market, and accumulation is falling off the chart. So this excites me as a potential selling opportunity if we can get some short-term sell signals in here. Mary, if those Bitcoin buyers are smart, they'll use some of those proceeds to buy gold. Yeah, you know, I wish I could figure out this Bitcoin thing. I just like, I don't get it. I don't understand it. I can't imagine that Goldman Sachs is going to let 2 guys with a computer destroy the financial system that they've established and have manipulated, run so well over all these years. So I think Bitcoin is a great speculative play, but long term, I don't have a clue. But boy, there's been fortunes made on it, and I've been on the sidelines, so I've been wrong on that. I just think it will be a trading vehicle from this point. At some point, you know, it took 25 years before they busted, who was that guy, the last big Ponzi guy, Madoff. Yeah, maybe it'll take 25 years for Bitcoin. And again, to me, my business is trying to make money trading, not being where the most active thing is. I want the low-hanging fruit. I want where I've got a really good shot of making money. If somebody makes a lot more money some other place, God bless them. But I'm just afraid to walk in areas where there's rattlesnakes and moccasins, and that's what I think that area is like. Okay, so back to the Canadian dollar. We were looking at that. Well, we're looking at the euro currency is strong here and the Canadian dollar isn't. So again, I always want to look at, if I'm in a family of commodities, I want to sell the weakest one and buy the strongest one. Back to the dollar index, look at the commercials are net long. They were net long here, net long, whew, good place to buy. They were net long here and here. The commercials have not had a net long position in this market very often. The last time was back in 2014. Big move to the upside. Well, that's where we are now. So I think we have a good potential in this market, which means even as a short-term trader, I can work this market on the long side. I don't want to sell short. I have to really have something big to force me to sell short, but I do want to take buy signals because I think I have an inside view of this market that the trend is to the up because the commercials are net long, a position we don't see them in very often. And we look at our intermarket forecast. So, you know, we've got an intermarket forecast. We've got a lot of stuff going in this dollar index. Here's the seasonal pattern. So lots of stuff going on the bullish side of the market. Accumulation in the market. Notice that while we didn't rally back to this high in accumulation, we're back at the same place. So there's been good accumulation coming in this market. Cycle low is right about now. This is starting to look like a pretty good trade. However, this is what happened. This is my actual trading. Okay. I was a buyer today at Friday's high. Friday's high. Hold on, just saying, this question's coming in here. The cattle trade, use live, those are live cattle, all that data is live cattle. So this was a trade, I've got $5 index. You can see I bought at the prior bar's high and my stop is down here. And that trade was entered on Friday. This is another real-time trade. You'll see my trade recap in a moment. This is cotton. Intermarket forecast says we should go higher, trend us up. Yeah, it was a buyer in here and a buyer in here, and after start buying back here, just raise my stops up. I think my first position was in here. Okay, here's that dollar index trade. I was stopped out today. Remember, I bought it the prior day's high. I thought, whoopee, we're going to rock and roll here. And the fact we took out today's low is not good. We shouldn't have done that. Now the short-term trend is down, so I was stopped out of that trade today. It's not unusual for me to get stopped out. My bias, though, is still to the long side, so I have to wait now for another short-term potential buy signal to get set up here. Probably the only guy in these webinars that actually shows losing trade. That was a losing trade. Here's my unleaded gasoline. I talked about that earlier. I sold this up in here, 10 contracts, a profit, and that was $22,000. Had a target here, and then I lowered my stop on this one. I was also stopped out today. Took a nice profit in it. But was stopped out just about at Friday's high. We started to bobble around here in the percent R's in the overbought area, sorry, oversold area. So I know my target's close. Unfortunately, we didn't go to it. I got stopped out. The way I exit my trades is a trailing stop or a target. And once I get a nice profit like this, $22,000, $23,000, I keep bringing that stop down because I like to take that money home. Here's another trade I'm in. This is the bond market. I've got $3,700 profit in it. My stop's down at the low of Thursday. A short-term target at the upside of the market. Not a big trade, more of a short-term seasonal trade than I really set up one. In TradeStation, you don't find Larry Williams. It's a company name which is L&L Publishing. If you want any of this stuff, go to the App Store. There's trading strategies, course indicators, but look for L&L Publishing. That's where you find me there. And that's going to wrap it up. We've gone enough with my stuff. If you want to ask questions now, it was probably a good time to do it. And I can try to answer your questions for you as best I can about any trades or just what it is like being a trader. Or maybe I bored you all and you want to go home and go Christmas shopping. Well, Prem, thank you. Using COT, my entries are often early. How do you deal with that? The commitment to trade report is not a buy-sell thing. It's a setup tool. So my idea is this. I wait for a setup condition, whether it's commercials or whatever it is. Then I go to the market for a trend change. So I want setup condition, then trend change to get me into the marketplace. I won't buy just because of a seasonal or commercials or valuation or accumulation. I still want some type of a trend change in the market. I hope that answers that for you. And I've got a bunch of questions came in here. So this may have been early. Oh, wow. Okay. How do you handle rollover when you hold futures? Well, you got to be careful with TradeStation. Much as I love these guys, they'll kick you out of a position on first notice day if you haven't rolled over. So I do watch first notice day. Well, sometimes I've forgotten. Frankly, I got kicked out of a trade. But you need to roll into the next contract out. And the one I want to roll into is the one that has the largest volume of the next contract out. That's one I'm going to roll to. I hope that answers it. Benjamin, what's your best advice for a newbie? Well, maybe quit and go home. No, not actually. This is a game of perseverance. Don't believe all this stuff about you're going to make instant wealth. You're going to be wrong lots of the time. This is not a business of perfection. I'm pretty good at this, but I still have losing trades. You saw them today. So you have to be able to stay the course. Don't believe a lot of the stuff that you read. I don't think that most of this technical stuff works very well. That's my view of it, at least. I think the shorter term your time frame is, the more difficult it will be to make money. So I guess that would be my key takeaway points. Use money management. My son is a psychiatrist and did extensive interviews with some of the greatest traders the world's ever seen. It was really interesting what Jason found out. He found out, first of all, these people all have a low self-confidence. It's surprising, isn't it? They're worth billionaires. They're billionaire guys. But they don't have all that much confidence, which probably explains why they don't plunge in the marketplace. And they're all very good with details. That's my worst point, by the way. So you can learn your weaknesses, where you're strong and where you're weak. His book is The Mental Edge in Trading by Dr. Jason Williams. He's a psychiatrist at Johns Hopkins. That might give you some emotional insight into it. I think paper trading is great. A lot of people don't think so. It's not quite the same as real trading. I still do it. I still learn by going over the past. And I think every profession does that. Doctors cut on cadavers. Rodeo stars ride a bucking machine before they ride real horses. So that would be one. Go slow, first of all. How about options on commodities? Well, clearly there's a lot you can do with options on commodities. It just, I've spent my life on this stuff and I don't do options. I'm looking at it, over the years, but it's just never intrigued me, I guess. You talk about Bitcoin or other cryptocurrencies. Well, I think they're going to be trading vehicles, and that's about it. There'd be wild trading vehicles. What it concerns me is you can't sell them short. One that the CME came out with, there's no short selling. Well, we're good. And the margin is 50%. Well, that's like a stock. So where's my advantage as a trader? Probably to go find a commodity where I get like treasury bonds where I can get a 90% margin for my money. I'd rather go there than something that's wild, crazy, and I can't sell it short and I have to pay high margin. Is that worth it? I don't think so. Where can we get the automated trading strategy? It's in TradeStation. Look under the L&L publishing thing. You use different indicators for different markets. I don't. No, I use the commitment trader report. I use my measure of momentum. I use the same measure percent R. I don't. The intermarket relationships, of course, are different. And those I do differently because what influences hogs are going to be primarily corn prices and energy prices, and corn doesn't influence the dollar index, as an example. But I don't try to measure. But part of that is the question I get a lot is, what's your favorite market to trade? So I'm going to tell you, my favorite market to trade is the market that's the most set up now. The market where I think all the conditions are coming together. That's the market I favor. Like I've showed you a couple here: the silver trade, the Canadian dollar trade, the sell short retail stocks here at right around or after Christmas. Those are on the front of my burner. And then later on, there'll be something else in the front of the burner. I don't have a favorite market. I want what's set up now. What were you saying about the direction of the T-bond market? I've been really confused on T-bonds, John. Long here, trailing stop, target a little bit above the market. I can't fall in love with it one way or the other. You show the trade so a new trader can follow your trades as part of the package. The only place where we really do that is in my weekly commentary, Larry TV. You know, I say, here's where I want to be a buyer or a seller, and we follow up on those trades. Can you discuss bonds a little more? Sure, bonds. Bonds have strong seasonal influences. First of all, if you're going to be a bond trader, they have great margin ability. Wow, and when they were in pit session, fills were really good. I would do 1,000, 2,000 bonds at a time and get maybe one tick slippage. I think slippage is even better now, by the way, than it was back then. That means each tick is worth like $64,000. That focuses your attention. But the pit sessions are gone, and it's a whole new business out here. I don't have a long-term view of bonds right now. To me, it's been a trading vehicle, and I would have to go to pull out all my charts to get anything more than that. I'm sorry, I can't tell you bonds are going to go straight up or straight down. I just don't have a strong reading on that one way or the other, and I'm sorry, Chris. You offer seasonal trades as a service to your client. I don't offer seasonal trades as such because most of these seasonal trades don't work out. I mean, you have to be very careful. I don't take a trade just because seasonality. We want to compare price action now versus seasonality. The trading day of the month strategies, we'll look at those, but that's not pure seasonality, but we'll do those. But again, almost all my work is selective. I'm not just, you know, in the past, hogs rallied on such and such a date, 90% of the time from here to there. Well, you know what? I found that stuff doesn't really work in real trading very well. I'm very careful of it. Are all your indicators through? Yeah, they're all in TradeStation, yeah. What is the greatest factor of becoming a successful trader? Wow. I don't think there's just any one. I think it's probably that low self-confidence is good. Using money management, never plunging is good. Not rushing into trades is great. Just let the trade come to you. Don't feel compelled you've got to make $1 million today. That's probably the worst thing for me in dealing with people. The fact that I made millions of dollars trading and 1 year took 10,000 to $1.1 million in trading. Well, that's like headline stuff, and everybody thinks they can do that. Well, I've been trading for 20 years before I did that. And they think they can duplicate that in a hurry, and it's hard to. So any time you make money, it's hard. There's risk and there's work. And you have to understand this is not an easy business. So I'd say those are some of the things that might help a little bit. How do you go about measuring cycles? Well, you know, pretty simple. I just count the number of days from one high to the next high or one low to the next low. There's a really nice piece of software called Timing Solutions. I use that. You can probably go Google that. That's been very helpful. Yeah, this is a marathon, not a sprint. Oh, Lori, you're right about that. An old former washed-up marathon runner. I can tell you about that. Actually, this is really interesting. The secret to running a fast marathon called negative splits. Your first half of the marathon is slower than the second half of the marathon. And that's true of almost any race, by the way. So this is a race. When you want to win, don't start out too fast. You start out too fast, you can get in a lot of trouble. Oh, Lisa, thanks for being here. 1,000 sharp LFIN Friday. Like, great trade. Whatever LFIN is, I don't know what that is, but way to go. Congratulations to you. What do you think of crude oil? Oh, I think crude oil is going to rally in here. On average, how long do you hold your position? My average position is probably 12 days, something like that. You know, 3-4 days, I start to get nervous. 12 days, like, oh my gosh. So I don't hold these for months and months. I'm a 3 to 12 day time frame. If gold's forecast decline in February, what would that imply for the ES market? Well, Joseph, I'm working on my stock market forecast, and actually there's not that much correlation between gold and stock price. You'd be surprised when we do all these fancy mathematical studies. And they don't correlate as much as we would think that they would, so I wouldn't read too much into that. Yeah, Ted, Christmas came early for you. Way to go. How soon before your 2018 forecast? I'm working on it now. I don't know. Hopefully around Christmas we should get it done. Wow, the stage 4B survivor, emotion where only money applies. I've been an option for 30 years, 1 year experience, 30 times. Yeah. I mean, here's the key to your emotions. If you're getting over emotional in the marketplace, I wonder if I can write this. I'm going to try to write this. Yeah. Yeah. E is your emotions, right? Equals. So how much your emotions are Einstein's formula, mc squared. Let me explain the formula to you. Your emotions are caused or equal to the amount of money you have, put a $sign there, by the number of contracts you have. That's what makes you emotional. It's not the emotions, it's not you, it's not the market. If you're emotional, it's the size of your bet is too big for your emotions. That's what you have to work on. So money management really and truly is emotional management. I know in my case, if I have a stop loss, I'm trading 100 contracts or something, and my stop loss is $50,000 away, emotionally, I have trouble with that. It's only a small percentage of the account, but emotionally, you know, 50 grand is a lot of money. I grew up poor. I mean, that's more money my dad made working for years in a refinery. And that emotional baggage is still in my head. So you have to find your emotional point where those things don't the numbers aren't too big, the percentage or the dollar amount. So that's what I would say about emotions. If your emotions, it's got to be your bet size is too big. Yeah, Mary, I'm the underachiever. You're right about that. Bitcoin will be taking cash by. Yeah, this Bitcoin could change the whole world. I just don't know, and I'm a trader. You know, I traded pork bellies. I didn't know what a pork belly was. I had never seen a soybean. I traded soybeans. So I'll trade this stuff once it has a trading history. And you know what I'll do? I'll use commitment to trader report. I'll use trend. I'll use %, I'll use seasonality. I'll use the same old tools. I've been doing this shtick, for instance, about almost 55 years now. And it's the same tools. You know, markets trend, markets have pullbacks. They set up little emotional patterns you can take advantage of. Have a trading plan. Yeah, have an idea. What is CTU? I don't know what CTU is either. Cuber trading. Oh, okay. Yeah, there's so many cyber trading. There's so many educational things out there. My gosh, when I started trading, there was nothing in the world of education. I was, you know, you talk to your broker. You know, it was different now. Just be careful because a lot of these trading rooms, I've heard of, you got to be really careful of. Yeah, oh, Greg, you're way too kind. Do I ever use calendar spreads? No, I don't. That's kind of over my head. It gets too confusing to me. Where can we find the recording for today's webinar? I'm certain that John will post that. What are your rules for taking profits? That's my weak point, frankly, because I'm greedy. I always want to take profits a long ways from where the market goes. So I've learned to have targets, short-term targets. If the market goes there, I got to say I'm happy. If it goes higher, so what? I took a nice profit. But it's targets and trailing stops is how I get out of these trades. And the targets are pretty mechanical. Yes, they are. Well, it looks like we've answered most of the questions, and we've got about 57 minutes, which is what I think we're trying to. The expected annual return on user E-mini strategy, I think this year it's made about $10,000 on a one contract basis. Oh, thank you, everybody. It's so kind of you people to be here. I appreciate your comments, and I hope all of you have a Merry Christmas and a Merry Christmas trade. We're in a bull market, and we're at a seasonal bias in the marketplace. There ought to be some way we can, oh yeah, FNN days with Tom DeMark. Man, those are the days. Those are something. Well, thank you again, everybody, for being here. And of course, thanks TradeStation, because you want to get educated. You go to TradeStation's YouTube channel. This is the only brokerage firm that has done what they've done. My gosh, they have so much stuff there for us to peruse and learn from. So I want to thank Dan. Okay, I answered that. I want to thank Don, my friend Mike Burke there as well, and Chris, everybody at TradeStation. They've been so great to Louise and I, so we appreciate you. Thank you, everybody, very much. We're going to sign off now. Merry Christmas to you. Good luck and good trading.